This conference will now be recorded.
Good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 9:07 p.m. China markets just opened a short while ago. I was waiting on that to see what the reaction would be, so we would have a little bit more material to talk about and understand and forecast. Today is the 1st of March, 2020, beginning of the first quarter. I'm sorry, the last month of the first quarter. First quarter ends at the end of March. Very important quarter for financial markets, U.S. financial markets. Talked about that a while ago. This session will be recorded, uploaded to the YouTube channel for viewing by all other members and pre-trial subscribers at their own time, hopefully before the market opens tomorrow. Quick reminder, important reminder to check out our Instagram channel, which shows the highlights of a bunch of our powerful options trades in the form of visual charts, which I don't have time that much to post during the day. I mean the charts. And certainly all of you should follow and get everybody else to follow. Our follower count is growing, but we need to get there into the thousands. With all your help and cooperation, I'm sure you guys can make it happen. Welcome. So we're basically every Sunday since last Sunday, other Sundays too, but more so since last Sunday, we're witnessing history. And many of you who are new to the markets, this is the ultimate time to learn. And I'm not just talking about all my tutoring and all my comments and this and that. You can just watch the futures and see the dramatics that happen. And you have to all keep in mind one simple thing. Markets are discounting mechanisms. Can any of you explain in simple terms what that means? Financial markets are discounting mechanisms.
Not sure.
Okay, so it's very simple. Markets like to look forward. They react to immediate moments, what we call recency bias, like what's happening right now. You know, we're all human. We all jump around. Some of us try to be a little less human and more robotic when we're trading and managing our investments, and some of us just jump around like crazy and on every little tick that happens. So basically, markets are discounting mechanisms. What that basically means is they're looking ahead. They're looking ahead. And everything that's happening right now, I'm not saying that they're fully discounted in the markets. There's a lot of other risks. You know, New York just had its first, I just saw the headline, first coronavirus confirmation. And if there is a mini outbreak in New York City, you can rest assured we'll be down 500-600 points futures just like that. And I mentioned this in my previous webinars. So the risks are always there. And if it turns into a global pandemic, like the Spanish flu and whatever that's happened in history, then global growth is going to come to a screeching halt. Doesn't matter what the central banks do and what, you know, how cheap things get. But saying all that, if we look at the moment here, what you're witnessing is complete history. And all of you, especially the new members who are new to the markets, you guys have to really appreciate it. You guys have to get excited about it. And that's how you make money. Now, some people will say, okay, Frank, you know, enough of the preaching and stuff. Well, it's a very large component of what you do on a daily basis, the behavioral mental component. So get excited about this. We opened down with all the stuff that happened over the weekend. Iran is having like a full-scale, you know, mini pandemic. Korea's death rate is going higher. And in Japan, things are going higher. Then we had our first death, and now the second one out in the West Coast. Italy is a mini outbreak, and that's a major. You know, it's just not too far. And so the case is outside. And then China's numbers came out on Sunday night, which were horrible. But what's new about that? We knew it was going to be horrible. Their economic, you know, their not their actual growth number. I believe it was the PMI number, which is a measure of the price purchasing managers index. So factory orders being, you know, very down. I mean, it came somewhere in the 30s. I think 35, 50. Above 50 is expansion. Below 50 is contraction. So what's new about that? That's the reason why China is flooding their economy, cutting rates, and doing everything that a country should do, just the way we did back in 2009. We flooded our economy with money and stabilized the situation. And at that time, everyone's, oh, you couldn't, people were just, some people were just like screaming, oh, it's the worst thing ever. Our deficit's going to go nuts. We're going to be in a complete abyss a year from now. All garbage. They criticized Bernanke. They criticized at that time the Obama administration. Secretary Paulson, one of the finest Treasury secretaries we have had, ex-Goldman Sachs, a guy. It was just horrible. And I just sat there and explained to all my clients, institutional and retail, like, relax, chill out. Keep your politics aside and look what's happening. And guess what? The economy stabilized big time, and from S&P down from 666, it really hit like around 666, the devil's number, to a gazillion points higher over the years. And then President Trump comes along, fantastic, phenomenal business-friendly policies, cuts taxes for businesses, cuts taxes for individuals, promotes business-friendly policies, and boom, the next leg starts. And central banks did what they're doing. And he still gets a beating from Donald. I mean, come on. So bottom line is that central banks are the ultimate bastions of monetary policy. Now, at one point, monetary policy doesn't work. You can't just flush the economy with just free money. I wish it was free money for us. It's really not free money for us, right? It's basically free money for the institutional banks, for the large corporations and things like that. For us, it's really not free money. I can't walk into what do you call, Lending Tree or Bank of America and Chase, hey, listen, give me 100,000 right now. What are you going to charge me? 0.2%? They'd be like, yeah, see you later. Okay, but it's free money for the economy. So you guys have to understand that. So keeping all the policy thing aside, President Trump is following the same playbook, and in fact, he's pushing harder to and instructing the central banks to our central bank, the Federal Reserve Bank, to cut rates more and do whatever is necessary, which is the right thing to say. But you can't really, get in the face of the central bankers too much. They are not a political machine. They're an independent entity. I don't want to get into that right now. So other central banks, which I talked about in the last webinar, I've even posted it, such as, and focus here, this is what's going on. One second, let me zoom in while I talk. So the other central banks, China, which took immediate action, dramatic action since last week. And now Japan has intervened in the currency markets to stabilize the currencies and provide liquidity to the markets. Korea's moving in. Taiwan's going to move in. And then the Europeans are going to move in. The biggest central bank, the largest central bank in the world, somebody might know this answer and I'll be very impressed, which always likes not to provide liquidity to the markets, are very tight, what we call fiscal conservatives. Who are they? And they've been criticized for that through and through. And I'll give you a hint. During the Italian fiasco, remember a couple of years ago, Italy's falling apart, taking Europe down. Then Greece is falling apart, taking Europe down, and the world economy is like, oh my God, even though Greece is like nothing for the world economy, but it's tied in with one of the largest central banks, which are complete hawks. That means they are tight-fisted. They're like that uncle or father you had, which said, you know what? You're going to frigging work for your food, which in the long run is a great thing. But in the short run, you're starving because he ain't going to give you the food because you're not working. So what central bank is like that? And now they are finally coming around.
Is it IMF?
IMF is not a central bank, okay? Central bank is a sovereign bank of an actual country. I'm looking for the name of the country.
Is it ECB?
Germany.
Who? Is everyone's mic working? Because last time Heisenberg had mentioned some people couldn't hear me and stuff. So I want to make sure that everyone can hear me. You said something.
We're good.
Germany.
Okay, good. Thank you. Thank you, Mr. Harrington. Hats off to you. Germany. The Germans are fiscal conservatives. During the Greek crisis and the Greek economy is falling apart because they're a bunch of morons how they run their country. Their billionaires literally steal and take all the shipping tycoons, move their billions in a second and leave their country, to die. None of our billionaires do that, by the way, just so you know. And our billionaires are the best billionaires in the world, if you ask me. And yeah, the Germany. And now Germany's coming around. So over the next couple of days, you should expect to hear, and this is a macroeconomic, little quick tutorial for people who have no idea, and I don't blame them. Our education system fails in teaching us economics, our kids. So bottom line is that, yeah, Germany. Now Germany's going to start to ease. And then you see a friggin' bull market. Because Italy, with the coronavirus right there, Germans are extremely efficient people, the best, highest quality products and stuff. So I haven't heard any corona incidents in Germany yet. But hey, there are open borders there, right? Because they're part of the European Union. So I wouldn't be surprised if we got one in Germany too. Of course. So Germany is going to be finally coming around. So when you have that much money coming into the global economy on a short-term basis for stabilization, where do you think that money goes? A good bunch of it goes into the equity markets, which are tied in with the real economy. You think the real economy? I remember when we were back in 2009, when we were flushing and cutting rates and going nuts on and the bailout. You know how badly that bailout was criticized. The Tea Party said, "Oh, that's it." So what's the Tea Party doing right now? Wanting more bailouts, right? It's all hypocrisy, guys. That's why keep politics aside. What did the Tea Party say? Oh my God, this deficit is going to kill America. We're just printing money. We're just like killing ourselves going forward. Hello, yes. And right now, the same people are screaming and shouting for more rate cuts. Exactly, right? Can't run away from hypocrisy. So bottom line is that that money goes, a good bunch of it goes into stabilizing financial markets because Wall Street is tied to Main Street. If we were down another 10,000 points, let's say 6 months from now, you honestly think the U.S. economy is going to survive? Come on. And worse is, President Trump is going to lose the election, and from an economic business standpoint, short term, it's going to be a negative. After that, whoever comes in, trust me, the markets are going to bounce. Read my lips. All right? They're going to bounce because there has been no president who's come in, including Obama, who nobody knew who the hell he was, a senator from Illinois. Markets fell for a month, and after that, see you later. Straight up. Because they can't change anything. The system cannot be changed. So get that through your head, guys, all right? Please. So the same thing. So let's say, for example, Biden wins. He got a big move this weekend, right? Like on a relative basis, between Sanders and Biden, if you just had those two choices, who would you vote for? Biden. Because he is less, he's not a confirmed socialist like Bernie Sanders. And the markets and Wall Street would go nuts higher. Because Biden's also very connected with Wall Street. Trust me, Elizabeth Warren's kind of connected with Wall Street too. But and they're both, Elizabeth Warren's what like $30 million bucks? She's not earning $30,000 a year, So anyway, so that's it. So saying all that, what you witnessed tonight, when futures opened, we were down, and futures have a little discrepancy. And Z, probably you noticed that because we closed around 29.80 or something. We closed on Friday at around 29.90, 29.80, right around here. And we were down to 29.08. So we were actually down 80 handles. But when I looked at Think or Swim, and I posted that to keep you guys abreast, it only showed we were down 50. So I don't want to get into that, whichever the case, all right? Because we closed around 29.80 right there. Let me just zoom in. Thank you. Keep this aside. That's called central bank intervention, okay? And all this talk about printing money, it's actually not printing money. I'll explain all that on the advanced coaching session to my students, and I'll mention that on the webinar sometime. Printing money, my butt. So so bottom line is that so this is where we were. We were down when markets opened tonight, Markets open around, the futures actually started trading around 5:45 for some reason. Normally it's at 6. So Sunday, right there, 6 o'clock. So let's highlight this. Let's go from Friday, and you got to put this in. You guys really need to, understand this stuff. It's all visual. There we go. So Friday we had a monster day. Monster day. There's no question about it. Everything that I told you to got by at stages, scale in and all that stuff. Huge gains. I actually sold a bunch of my SPY calls. SPY calls, by the way, trade till 4:20 or 4:30 p.m. after the market closes. I sold some of them, which we had bought at 2. I sold them close to 6.5 after market, and I left a bunch of them in there. So this is something new that some of you might not know. You can actually sell SPY options, calls or puts. After the market till about 4:15 or 4:30. I can't remember. So I saw it spiking above 6. I'm like, okay, click, sell. And I left half of it in there.
Is that only sell, no buying?
No, you can buy.
You can buy also.
Yeah, of course, it's full trading, buying and selling. Absolutely. They move around fast after hours because they're like, SPYs are like, it's a derivative of the futures, right? The futures are a derivative of the SPY. So yeah, absolutely. So let me show you that very clearly. And this is something going to be very, very helpful to you guys, people who are trading. Second coronavirus death reported. We just heard that. Very sad. We should all say a prayer for these. It is sad. There's no question about it. Okay. So we closed at what time did we close the market? 4. So 4 o'clock. Follow this line up. So we closed around here, somewhere around here. And then the SPY spiked. And they were spiking. Let me see. I think we closed here. Let me just get the cursor. I want to get this right. 4 o'clock, 3:55, 4. Okay, no, the SPY's actually closed here. Let me get my drawing tool back. Sorry, sometimes. Pen, come on. Good. So the SPY's closed around here. So we bought the calls at around, we were buying the calls throughout the day, but it was like 2 and change. You guys with me so far, right?
Yeah, we're good. We're good.
Good. So I hope some of you bought. And they spiked up to 3 and change, and by the time the markets closed, they were like 3 and change, almost 4. They spiked up to 6 plus. I can't remember the exact number. Stayed there for about a couple of minutes. Very fast moving. So I sold a bunch of them around here, and I left. I don't have the exact number in my head, but I left I think half or 1/3 positions open. I think half. Okay. So this happens. It spikes all the way to almost 3,000. E-minis almost 3,000 Friday evening. Now I explained this to my advanced coaching session. We did a brand new one with some new members. It was fantastic. I really appreciate your participation. I really enjoyed it, and I know you guys got a lot out of it. And anyone who's new should definitely sign up for that. These group sessions. I know Al was there. Ray was there. Franco was there. It was fantastic. Appreciate it. So basically, I explained very clearly that boost that you got, that was fast, right? From around 3:30 to 4, 3:15 to 4 was supposedly, CNBC mentioned that, and I saw it at another place. There was a $30 billion buy program. That's not a joke. Okay, $30 billion buy program. Gonna call it BP. That went and started buying the frigging market baskets of stocks, not individual stocks necessarily, mostly ETFs, exchange traded funds, S&P, this, that. And it was coming out of some 1 or 2 pension funds. Now let me ask you this question here. Pension funds getting ready before March 1st, why were they in a rush to buy $30 billion? Not a joke, all right? And that's why the market's turned around 400 points of equities, not bonds, equities, and credit-related high-yield bonds, which are the same thing as equities. High-yield bonds are basically the bond equivalent of a stock. Why were they in a rush to buy $30 billion? Any sort of common sense idea any of you have?
Getting a good price.
Yeah, I believe that the fund manager said that's it. Do they have some more information than us? I'm sure they do. But do they know exactly what's going to, if there's going to be 30 Corona deaths in the US or, no. Yeah, they have more information than us, that's for sure. You don't run $30 billion, just because, you're a dodo coming out of music school. So bottom line is that, so that's the reason that went up. Now, so my thesis is, because I'm normally biased on the long side, is and that's the way I look at my life too, is the glass being half full, is they said, you know what, let's put in a bunch here. So that was great. We all felt good. We left the weekend. We left Friday feeling like, okay, we stabilized. We had a strong week in between some rough weather, right? Absolutely. But did we have some winners? I mean, they'll go up in the history books. The CODX, the APT, the mRNA, the Gileads. We had some major runners at one point or another during the week. And so we leave. And then what happens? Then the markets open on Sunday. It right down here. So what's the first feeling? Oh my God, here we go again. I'm like, yeah, here we go again. So as a tactical trader, what level would you guys be watching when the markets open tomorrow if we remained here and we did not have central bank intervention? Quick, guys, quick. What level would you be watching to see if there was going to be any support? It is a very easy answer. Go ahead.
50%.
Huh?
Say that again. Support?
29.50.
No, not at all. What are you guys talking about? Somebody, please. It's such a simple answer, but I'm forcing you to answer because this is the way you're going to make money in this market. What is so difficult here? Can you guys see my screen?
29.50 or no?
No. 29.50 is all the way here. So how is that support if we opened here? That would be resistance. Are you why are you looking at things upside down, Mr. Heisenberg? If we open down here.
28.53.
Oh, okay.
Yeah, 28.50. It's not difficult. We shouldn't spend 6 minutes trying to figure out a simple answer like that. Seriously. So no, that would be resistance. So you answered it, but it was just opposite answer. So we opened down here, and let me get that. Let me make this pen red. So I would be looking at standard support level, which was Friday's lows. Friday's lows, 28.53, 28.50, exactly. Remember, there is absolutely, guys, and ladies, whoever is going to be listening, no guarantee that we're not going to be down 50 to 80 handles points down on the futures tomorrow morning. Telling you right now, there are absolutely no guarantees. So as a tactical trader, you're looking at support levels because patterns are being demolished back and forth and being formulated back and forth, i.e. technical patterns, and there's no way you can rely on them right away. So you have to, most importantly, in these hugely volatile markets, you have to rely on support and resistance levels in order to make money. You sell at resistance and you buy at support. And in between, we look at all the other indicators and stuff like that. Am I clear on that?
Yes.
It's really as simple as that, okay? Just rely on supports, resistances, in between multiple supports, resistances, and I try to draw them as clearly as possible on this chart too. This is a 5-minute chart, that's why the lines are a little bit off, on my other charts that I presented repeatedly. the Fib 50s, the Fib 23s, those things are critical. And I know Heisenberg has become a massive cult member of the Fibonacci. You're a cult member of the Fibonacci cult, right, Heisenberg?
Yes, sir.
Exactly. And you're going to see how these Fibonacci's only work to that degree under extreme circumstances, when the markets rip higher or the markets rip lower. So if we do a Fibonacci level, which is 50, half the gain, if the markets go up here, 3,000 before the market opens, I can assure you there will be sell programs to bring it down back, hopefully not to Fib 50, but Fib 50 would be somewhere here, just visually, like halfway, right? From here to here, halfway would be here. I wouldn't be surprised if we come back and lose 70 points. If we open up 200, 300, 400 points, I wouldn't be surprised one bit. I'll be selling right at the open. If we open up 20, 25 S&P points, I'll sell a bunch of my stuff, full or partial profits, because there could be a massive sell program that comes in, another news that comes in, the momentary, flash news, and the markets could very easily give back and come down to 29.30. That's 70 points. That's 420 points fast within the first hour of trading. It's very simple. Now, execution is hard. I realize that, because the markets are so fast moving. You see something up there, you try to sell it, boom, they slam you, because everybody's crowded in to sell there or buy there. So that's why I like buying lows instead of buying high, which it seems like most retail emotional traders like to do, or not buying at all. That's what they do. So okay, so this drama that you got that you saw from tonight is monumental. So this is a 5-minute chart. So as a futures trader, they could actually trade very effectively. I'm going to start trading futures very soon, by the way, given the volatility in the market. So I used to love trading futures because my charts are very good, because that's what I keep on showing, futures charts. And nothing is more sweet than making a bunch of money middle of the night. You don't give a care what happens the next day. So if anybody's really interested in futures trading, they should go and what do you call? I'm not going to teach that. The tutorials on Thinkorswim. There are tons of great videos on futures trading. You guys should do it. Middle of the night, make a bunch. Your day's made. You don't care what happens during the day. Now, let's take a look at the same chart zooming out. Let's take a look at this on an hourly basis. Nope. What am I doing? Too many things here. Erase all drawings. So, on an hourly chart, this is we call it the Canadian hockey stick formation. All right, and that's exactly what's going on here. And if we do let's start off by looking at the daily. So here's your daily chart. I had the fibs drawn on the weekly. Yes, I had the fibs drawn on the weekly. So we're going to start off from the broadest picture. And everyone must understand what this chart is. This is the ultimate swing chart. And then we're going to zoom in. And that's all we're going to do. And that's going to make you guys a lot of money. That's it. So bottom line is, let me take this line out. This is a weekly chart going back since, and this shows massive vol moments, events in the market, volatility events in the market, where the VIX goes nuts. And it happens like some sort of black swan, sudden event that happens, catches the market, and boom. Everyone's just like, oh my Lord, what is going on? So let me just move this back. This was the high in the market. This was the recent low in the market on looking at the date on the top. Oh, of course, we know what the recent low in the market was, the Christmas Eve massacre a year ago. on December 24th, and it had started 3 days ago. It actually started it was attempting to go higher. So 3 days relentless selling, and then on the 24th it did this, and then the market turned around. Actually on the 26th, these are futures, so you can see that we actually reached a bottom, and that bottom is 23.10. So what I did was I took this and I drew a beautiful, and it's very simple to draw, you just stretch the lines, Fibonacci retracement, because that is a pivotal low. So I need you guys to look at this carefully and answer a question. Here's your Fib 0, and here are the Fibonacci levels, the standard ones, from 0 to 100. 100, by the time it goes to 100, what do we call that? Okay, no one remembers. We call it full pattern completion. Done. Full pattern completion. So it doesn't always have to go to 100%. In other words, what's more than 100%? Nothing. Yeah, Fibonacci levels can go up to extreme Fibonacci levels. We have seen that, but that's not what we're getting into. So where is the 50 Fib here?
28.54.
Exactly. And I've already highlighted that. Took my time and energy to highlight it so you guys can see a fat yellow line. Does everyone see that?
Yeah.
Yeah.
And I drew this chart last week when things were completely breaking apart, and I showed this quite a few times. And it was picture perfect. If anybody had a crystal ball, well, for last week, I had one. And I shared it with all of you, beautiful ladies and gentlemen, as my friend Donald would say. You're a beautiful man. Will you say that to one day? He's a New Yorker. We talk like that. Okay? And why was this such a beautiful chart? And aside from Z, can somebody else answer? Because you guys are kind of new. And Mike, don't answer. Why was this so technically picture perfect? And you guys don't even have to think. If you read my comments and stuff on my Twitter feed all day long, all week long last week, and especially on Friday. Why was it picture perfect? Al. Okay, we don't have that much time. If somebody doesn't know,
Sorry
just
about
yell.
that, Frank.
Exactly as you predicted.
Exactly predicted what?
The swings
kind of-
up and down.
Okay, you're new. You get a hall pass, all right? Who was that, Ray?
Yeah.
Yeah, at least you attempted, so you get A+ for that. So no, I just explained about the Fibonacci retracement. I spent the last 10 minutes explaining where does the Fibonacci retracement normally go to. Okay, we don't have time for this. Silence. 50 Fib. Write that down and put it on your computer, guys. Write with big, fat markers. Fib 50. During extreme market volatility moments, the market generally goes up to the Fib 50, like I showed you on the previous charts, Fibonacci 50 level. Or if it's a multi-year story, which is since 2018, this is 2018, January of 2018, when the market had gone through a massive volatility moment, December of 24th of 2019, it reached another low. That's where we drew the Fibonacci level from. So the Fib 50, it went exactly there, and then it broke up. It found support there, and it took off from there. So now that we had this massive coronavirus global meltdown, Ray, where is it bouncing from? Ray, where is it bouncing from? I just gave you
28.
I'm not asking for you. Yeah, 28.54. And what is that? What level is that? I just said that probably 7 times in the last 10 seconds. The word.
Fibonacci 50.
Thank you very much, sir. Write this down, put it in your mental chamber, but more importantly, write it down, and because this will make you more money than anything else. Yes, the Fibonacci 50. So what was, well, when you're coming up from the bottom, it acts as what? See, when you're coming off the bottom, it acts as what? The Fib 50
It
acts as
would
what?
be resistance if you're coming
Thank
from.
you, thank you, thank you. When you're coming from the bottom, it is resistance. That's the roof. And when you're coming from the top, it is what?
Support.
Thank you. Very simple concepts. And this chart alone is worth thousands of dollars in your pocket in a day or in a week with small amounts of money. So take it seriously or take it lightly with a little green chili on top or Mexican pepper on top, you know, but eat it, all right? So now it's support. So that's why it's a picture perfect chart. And all I did was simply draw the Fibonacci levels from the December 24, 2018 massacre, which was a definitive bottom, a multi-year bottom, right there, and to the top when we went to almost 3,400, which I had predicted and forecasted a while ago. I did not expect to happen so fast, but it did. So now we had the bloodbath. So this midline has now become support, and that's why it's so picture perfect. If we break 2854, what is the next Fibonacci level? Let me just try to clean this up.
23.6.
1 second. If somebody's on a bigger screen, they can see it more easier. So I do apologize. Let me just move this back so you can. There we go. There we go. So the next time when you are literally about to cry, send me a DM, which I always enjoy, direct message, or send me a text saying, "Oh my God, should I sell and get the hell out? Like, what should I do?" What am I going to say? You know, oh, okay, just stay in. In the meantime, the volatility moves are going great, but I can tell you what will happen over a couple of days on a swing trade. Okay, so this is it. We break this line, and you guys are all very smart people. Ray, Al, Heisenberg. What is the next Fibonacci level?
Is that the 3029?
Why are you coming up with numbers today, like which are so way off? Just curious, because like, does it look like it says 3029 here? Just curious. Like,
Oh, I'm sorry. No, no.
yeah, I mean, I know, you know, but it's like you're totally off. Like it's 2727 right there. There is no 3029 here. The 3029. You see, today it seems like you are looking at things upside down, but you're still making shitloads of money, Heisenberg. So you know what? You're doing something right. But it seems like today you're just looking at things upside down. So no, that's the upper the 3029 is nothing to do with the fib. That is a major breakout level. This big fat green line. Does everyone see that? Don't leave this session without understanding these simple concepts, which are going to save your butt or keep you in the doghouse. I'm dead serious. Just trying to help, guys. This big green line is a massive breakout that happened on December 28th. Sorry, October 28, 2019, right there. And the market took off. Right there. And everyone got super, 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 super excited. And mom and pop got super excited. And bang. Of course, Corona was an added factor. The market was going to pull back anyway. I said that on multiple webinars. But pulling back like this, I'm happy that it did. Why? Because in one single week, in fact 2 weeks actually, 2 weeks, not 1 week. That's last week. The week before we had that red candle. In 2 weeks, we basically came back what normally would have happened in 2 months. Are you guys with me? This reset would have happened anyway, but now it happened in 2 weeks. And like I said in my previous webinars, the faster it happens, the better opportunity you get to make some nice money. So saying all that, is everyone with me so far?
Yes.
Or Al, Ray, are you guys lost, or is some of this making sense?
We're
Well,
getting
some
it.
of it's making sense. I came in a little late.
That's fine. Speed up your brain. You catch up. So
Hey, Frank.
yes, go ahead, Paul. Nice hearing your
It's
voice.
Paul. Yeah. Yeah. I just was just on your thoughts.
Yeah.
Given the speed of this decline, does that make you more bullish about a potential rebound?
Look, I'm bullish every day. Look at my trades. Do I think that the market? No, I'll explain that. That's a very good question. No, it doesn't make me more bullish. It makes me very excited. This is a serious technical damage, by the way, guys. Let's not take this lightly. How much was what was the number? 16 trillion or something? The global markets lost in 1 week. Let's not take that lightly. That's a body blow. That's not a sucker punch. That's like somebody just hit you in the head with a baseball bat. You barely survive. So let's not get around. So I'll explain that question in a second. But in answer to your first question, no, it doesn't make me more bullish. But it gets me more bullish in the short term to make a crap load of money and sell. Do I think the market's going to go back to its high? I don't. Can it do it? Sure. So this is what I'm going to explain next. So this is our major support here. We can't violate that support. This is the fat red line here. And please, for new people, when they look at these lines are not drawn for fun. They're drawn to make money or have you lose less money, in which case you make more money. So please take them very seriously. This is not a kid's game, what we do. It certainly isn't. I'll tell you that. But I think kids would understand these charts better than adults. So bottom line is that if this breaks, which can happen tomorrow morning, some sort of other wham bang news comes out, we lose this and we break below the 50 fib, here's your first support level. That's 277736. So I know if I'm falling, this is the level, which also happens to be this pink line here. Don't want to get too detailed about it. It's known as the 150-day moving average, used primarily by quant trade hedge funds as a long-term average. You break the 150, see you later. You go to the 200-day moving average, which, don't write it off, can happen. I'm looking for tactical short-term trades. I have no idea what the markets are going to do a month from now. I am looking at everything at this stage, like I explained to you guys before, on a 1-week basis. We are in the middle of extreme volatility. Extreme volatility doesn't just end in 1 day. And I showed a chart, which you guys, when I say print and save, when I put those tweets, guys, print and save it. You don't have to print it on a printer. Let's welcome to 2020. Take a screenshot of it. Use one of the free screenshot programs on Google and put it on a folder. I showed you that we could go bump around back and forth like we did here before we take the next dive to test the 200-day moving average. This can happen. I'm prepared mentally. And hopefully you guys are. Otherwise, like most traders do, they're just going to quit. They're going to blame everyone else and they quit. Good for you guys, but I don't think you guys will. You guys were smart enough to catch what I'm saying. So bottom line is that at this point, this is the next level. And then the Fibonacci 2727 is down here, which is another. Isn't it funny that the Fibonacci level 2727 happens to be the same level that the market took a big bounce after it was starting to fall? But that was a bull flag. I did say that was a bull flag. Why is it a bull flag? Because it is a bull flag. 1 second, just trying to get my pen. Bull flag. Bull flag. And I kept on telling you guys on those corrections, because all the internals, the basic internals, were just, all they were doing were moving sideways. Not this time, ladies and gentlemen. This is still pointing down. So this bump that we're going to get is not the final bump. They will sell it. Because net, we haven't retested the 150 or the 200, or who knows, maybe 2300, which is thousands of points lower. And boy, am I ready. And it's going to be fast and it's going to be furious. It could be an outbreak of corona in New York City. See you later. We'll drop 3,000 points. They'll shut the market down. So please be ready. Think I'm kidding? How about one in Washington, D.C.? They shut down all governmental operations. Donald gets cooped up in the White House, which he hates. He's like, man, I can't even fly to Mar-a-Lago because they won't let him out. Markets will be down 4,000. You think I'm kidding? So wake up, all right? That's called out-of-the-box thinking, game theory, possible, probable outcomes because of a certain variable, which is corona. Yeah, it can happen. So, and I'll show you why I think that the possibility of that happening this summer is very much there. Very much there. So yes, I'm bullish short term to make a crap load of money. Futures are up 26. And I'm always bullish on the markets overall. But I still think that once we hit the levels, and I'll show it to you guys exactly. And you know what? I've been right a lot. Question is that have I myself been able to take advantage of those exact positions? Overall, but I think my performance could be better. My performance could be better. At my best case scenario, I'm running at 60 to 70% peak performance. I'd like to be at 80. Most traders are at 20. Yeah, I can be better. So saying all that, let me show you the levels here. And that's going to determine all the stocks that we trade and everything. And of course, we're going to get the monster movers that have nothing, which will benefit from the corona outbreak and the pandemics and this and that. And I gave you guys one after another. And I'm not even in that sector. They were like, I read a list of like 16 of them. I didn't even know they existed. They were up like 300-400%. All you need is one of them. So let me clean this out. I don't like trading penny stocks on the biotechs. Honestly, I don't. But in these type of circumstances, when they're moving like that, I'm a trader. Let me grab it. Let's grab that baby that our great member Scott gave to us. Because he looks at a lot of these companies, which are like, I don't even know exist. And he gave that to us at 56 cents. Where does stock go? Almost 4. How long? 24 hours. You got to wrap those. Got to melt those. That thing's probably going to be higher tomorrow. It was still at 250. I left a little bit in there. I didn't go and add more, but I left a little bit in there because corona ain't going away. This coronavirus stuff. It's not going to go away. It's going to ease back, and then boom, there'll be another situation like I explained. New York, major metropolitan cities, Chicago, LA, Washington, D.C. See you later. Bang. Same routine again. In the interim, we can bounce. So saying all that, let's take my arrow. So at this point, 50 fib is the massive support. I told you what the downsides can be for the reasons that I just told you. And what's my upper level? I have mentioned this quite a few times, and I have a feeling somebody's going to give me the right answer. What is the magnet that the market comes back to? I explained this in the last webinar and the one before that the market comes to before it decides whether it's got the strength and the firepower to break through above it or fall from there again.
78.6 fib level?
No. I am asking you about, it is called the 50-day moving average, ladies and gentlemen. This is kindergarten 101. 50-day moving average. I showed my, even through those heavy volatile times, man, I show you guys some unbelievable charts. Trust me, a lot of the times I don't even feel like posting because I'm trading my stuff. I'm trading successfully. I'm doing some other trades on my end that I can't post. I don't have time to post. And I showed you a chart with all the moving averages, and I put print and save. So make a small effort, guys. Make a digital print, put it in a folder. And the moving averages, of course, move. But I showed you, I'm looking for it on the other end. The moving averages with the lines, the red line and looking for one of them. And those are precious because when markets get like this, all they're doing is moving between fibs and moving averages. So my moving averages are always in red, always in red. So this is the moving average. Now here is why I'm bullish, that I think we will break above the 50-day moving average. The 50-day moving average is 30.33, 30.32 at this point on the E-minis. I'm not looking at the S&P 500. We are right now at 29.80. Quick, let me get my $1 calculator here. 29.80. Are you guys with me so far? If you're snoozing,
Yeah.
you're losing. Anybody who's snoozing right now, they're losing. They're going to lose tomorrow. They're going to lose the day after. So don't snooze, guys. This is serious stuff because this is exactly what the markets are going to do. One way or the other, they're going to get there if we don't get another cataclysmic pandemic, mini pandemic on the coronavirus. Exactly what the markets can do. Markets can do this by Tuesday. By tomorrow, they can do it. 30.30 minus 29.80 is what? 50 points, right?
50, yeah.
Exactly. Come on. You guys are good at math. 50 points. So let's do the math here. 50 handles on the E-minis is roughly how much on the Dow Jones Industrial Average?
400.
Exactly. 400. Max move in the next 24 to 48 hours is 400 points on the Dow Jones Industrial Average. Sell. Sell even if it goes to 3,000. I mean, sorry, not 3,000. I actually moved that line around. The breakout level is, 1 second. This is called predictive analytics. It's a fancy word. A lot of services says, no, we don't predict. We trade what we see. I'm like, oh, really? So you actually trade the volatility the way you see it. By the time you see it, they've already murdered you. By the time you see that ninja coming from the back or the gangbanger coming in from the back, you're done. You got to predict where he's going to come from. You know, the Japanese ninja, no one ever saw them. They just came, boom, your head's gone. So you're going to trade what you see? Okay. Yeah, we trade sometimes what we see, but most of the time, we're doing a lot of predictive analytics. Are you guys with me on that?
Yeah.
Exactly. So this is the predictive analytics. So focus. So this was the last breakout level. That breakout level is 30.31. That also happens to be, lo and behold, the 30.30, the 50-day moving average. That is a massive resistance. If we go up from this level, we're going to open up nicely. Futures up 27. If we go up to the 50-day moving average and it slices through above that, that's a different story. And it can, because the move was so violent. The central banks are so serious and violently injecting money into the global economies. A coordinated central bank action is not a word that you just hear on Bloomberg or any financial need. This is serious stuff. That's when the quant short funds just go short cover, short cover, short cover, and they go long. And you get this monumental move. The next move is going to be what? Once we take out the, if it slices through, it can happen. It's called the breadth thrust. It's like a jet. I always explain it like a jet propulsion engine, like on a rocket has boosters, right? So when the rocket takes off into orbit, it has to overcome what?
Gravity.
Exactly. Earth's magnetic field, right? The gravity. And in order to take out that gravity, which is Earth's magnetic field, it needs extra booster rockets, right? Yes?
Yeah.
Guys, I'm not treating you like a children. I'm telling you stuff which matters to the market. Those booster is what the central banks are doing right now. Not mom and pop. Mom and pop's not going to touch this market. Trust me. They're not going to touch this market till it's back up here again. And then they're going to drop the market again. So forget that. Mom and pop's out. Done. They love our president, but they won't put money in the market. Great. So those booster rockets fall off when the rocket takes off and enters orbit, and then it just basically takes over. There's no gravity up there, so it goes into orbit around the moon or so. What happens to the booster rockets as it
They drop.
They drop. So as this market takes up and stuff, the central banks are going to ease back on their injection of massive money. Do you guys understand the concept?
Yeah.
Thank you very much.
Yes.
Thank you. Good. Explain that to your kids. Not the central bank stuff, the booster rocket stuff. So my son has absolutely no desire for astronomy. I love astronomy. And I'm not talking about cheap booster rockets, but stargazing. So bottom line is that once this takes off, what is the next level? The 400 level is just coming up to the 50-day moving average, and which I'll show something very interesting why this is actually kind of bullish. So 50-day moving average, at that point, there has to be selling, because you break 50, there's a lot of systematic funds, a lot of old-fashioned fund managers. Oh, it broke the 50-day moving average, see you later. More sell programs come in. So you get that extra whoosh down. This is a very long tail hammer on Friday, which was very good. So once you take out the 50, what's the next level? And I've mentioned this quite a few times. Won't hold you guys to it, but what's the next level?
20-day moving average.
Z, come on, man, focus. Above the 50 is what? It's staring at you. Let me clean the screen out. 20 is the third level. What are the two major moving averages from a longer term perspective do I look at?
34.
Thank you. Mike saves the day. The 34. Wake up, guys. Serious. Well, you guys, I can't blame you guys. You guys don't know this stuff. But I have explained it, so, quite a few times. The 34-day moving average, okay? Again, I repeat, you think this is a joke, you're going to keep on losing money even if the markets are up 700 points. I guarantee you that. When this market was taking off like this, and I kept on saying bull flag, markets uptrend higher, guess what? People still lost money because they were stupid. And they were too scared to buy, even though I said uptrend intact. You think I'm kidding around? Come on, guys. All right. So the next one is the 34-day moving average. Thank you, Mr. Harrington. And what is that number? And Mike, don't answer. Al, you're here to learn. What is that number?
3090.
Thank you very much. Don't answer a question with a answer a question with a question. Don't say 3090. Say 3090. It's like, don't be scared. No one's biting your head off. Okay. I'll only bite your head off and teach you the right way on the bootcamp ACS, which you did actually. You answered all the questions like perfectly. But again, it's not a Q&A session. I mean, it's not a quiz here. So yeah, 3090. So we know what the next level is. If it takes that out, the next level, this was actually a support level which got taken out like no one's business. That I'm moving it down just so you guys can see what is the next line. That's the one that Z just mentioned. Z skipped 34 and went straight to 20, right, Z?
Yeah, I don't. That's like you always mention that people that know a little bit previously, they have their old habits. I never use 34, so.
Oh, okay. No, not a problem.
I learned,
yeah, I always use 34, and you don't have to use my line. You can use whatever. Some people use 8-day moving average. I use 5-day moving average. Al, why do you think I use a 5-day moving average, which happens to be this yellow line? This one. This is the short-term trading line. This is the ones that day traders use a lot. I use when I'm fast trading. What is why do I use 5 days as the moving average? It's question just for Al. Think.
5 days in a week.
Thank you, Mr. Harrington. Al, there are 5 days in a week. So this is the short
Last
term.
time I checked.
Last time you checked, exactly. This is the first time you're actually thinking. So it's good. So yeah, so there are 5 days, and I use 5 days because if I'm doing short-term trading, if the market or the stock is being supported at the 5 day, that means bang, 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 bang. It's going to keep on going higher. But the 5 days is a long way up. So forget that. First thing we're looking at here. Second is looking up here. And by the way, a lot of you who are new, if you can handle the individual stock stuff, because individual stocks can be up or down even if the markets are up. Just do the SPYs. Do the QQQ, which is the NASDAQ, or the IWM that I told people to buy, the Russell 2000, which is US-based, US small cap companies. But the SPYs are the best ways to trade the market for new traders because it's the market. And new traders, in my opinion, should not trade Tesla, because up or down, it's going to run over you. It's too fast, too crazy. I'm not saying you can't do it. Do whatever you want. I'm just giving you like it's like. It's too dangerous for most people. You can trade Apple. That's more like the spies. You can trade Facebook, which moves with the market. Netflix, different story. Netflix comes out. Somebody said, "Oh, your new show sucks." Boom, stock's down 15. Roku's like that too. So just letting you guys know, this little piece of suggestion. So that's it. So if we get to the 20-day moving average, we would have negated this downtrend. In other words, that downtrend has been negated. So that brings me to my next point here. There is a line here, and I want people to see it and find it on their own. That's when they're going to make their own money. So this is this line. It should in blue. And I'll repost the chart tomorrow, which each of these lines, and I wrote 20-day, 50-day, and I did that quite a few times. Do any of you remember that? Or you guys were looking for a bottle of Corona? I did that a couple of times last week. I'm looking for it right now. I wrote, it takes time. I put 34-day, 20-day, 50-day. And if you remember, okay, don't worry about it.
Yeah.
I think we went over it last webinar.
What?
I think we went over it last webinar. I think that was Thursday or
We went to it last webinar, but forget the webinars. If I shut down the webinars and you guys are forced to just look at the Twitter feed, trust me, you'll force yourself to learn. Look at this. Print and save. If you don't print and save, I'm not going to update charts every 5 minutes. You lose track of the road. You will crash and burn. Your portfolio, I mean. Print and save. So you can go back to it and look at it quickly. I'm going to say it again until somebody gets mad. Print and save. Digitally, on your computer, on your iPhone. Take a picture of it on the iPhone and keep it in a folder. Wouldn't that be a beautiful idea? If you're on a desktop, use a screenshot program to take a screenshot. You got it? On the iPhone, it's the easiest. On the iPad, the easiest. Click, click. You saved it. Are you guys with me on that?
Got it.
Next time, do it.
Done it.
Because I ain't going to be posting the charts every 10 minutes. I'll probably post this chart once a day, twice a day. Because this is the kindergarten, 4th grade version. I love 4th grade version charts. I used to put that on stock tweets. 4th grade version, 2nd grade version. I don't do 9th grade version because I'm not that smart. Okay, red line, boom. Yellow line. I mean, this is the orange one, 34-day moving average. And this is actually not the chart. The chart that I actually put down in big bold letters like 34, 50. That's the 2nd grade version. This is like the 4th grade version where you actually know what the colors mean. Anyway, to make a long story short, is what happened here? I closed down the whole thing. Oh, that's really nice of me. I closed down the browser. I didn't. So bottom line is that generally speaking, at the point that we are, I'm going to use the word that I hate, out of the technical woods, okay, is where? Can somebody tell me? Like at that point, we are back on track. I'm not using the word. Please look very carefully, and you will see a line that goes from left to right. Higher, please. Let's, it's 45 seconds. That's it. That's a long time. I don't like this silence. Like I'm asking you guys to do advanced calc or something.
27.
Huh?
27, which is the 38.2 fib.
No. Don't get stuck on the fibs too much. I said It's a line that goes from left to right, up. Come on, guys. Because if you detect it, you're good. So this is not for my benefit. So I'm going to force you guys to look at one of the lines that's going diagonally in a 45-degree angle up.
The white line.
Thank you. And the white line is roughly what? It also happens to be the 78.6 fib. Did everyone understand who was it, Heisenberg?
Paul.
Paul. Oh, who said the white line?
Paul.
Oh, you sounded there like other ones. So while you guys were mysteriously looking at this is your uptrend line. Really simple. Okay? This is the uptrend line. That uptrend line was violated viciously on a weekly basis. Of course, we tried to hold our ground here, but the enemy was too strong. Boom. So once this uptrend line broke at 31.43, roughly around 31.60, if we go up above 31.60 on the E-minis or 31.65, somewhere around there on the S&P 500. Let me write this down. This is known for the completely new people. Al, by now you know what an uptrend line is or a downtrend line, right, my friend? Ray?
Yes, sir.
Ray, you know what an uptrend line is, and an uptrend line and a downtrend line?
Yeah.
Good. A downtrend line is this, uptrend line is this. Simple. This was a major uptrend line from December 26 when the markets opened, and we were up 1,000 points the next day after the Christmas Eve massacre. And by the way, we didn't know it was going to turn, but if you go back and listen to my video at that time, I did say we are going to have a vicious bounce within 24 to 48 hours. And we did. I don't say that lightly. And it was just see you later. In between volatility during the day, it doesn't mean that it just went straight line up. It opened up, came down, everyone freaked out. It opened up, boom, came down. Then we had one bad day. I mean, I didn't have a bad day, but there was one red day and everyone was like, oh my God, we're going to crash and burn. See you later. Yet, stochastics kept on moving higher and it went. Now, that's the last thing we're going to cover on this session, the STOs. So it's this uptrend. This is an uptrend line. And the market was holding this uptrend line very nicely from December to August of 2019, September of 2019, October, November of 2019. Every time it looked like it was all over, I said it was a bull flag. But at the same time, when you get 4 days of large red candles, one was an inverted hammer. By now, you know what an inverted hammer is, right? It's a Chinese firecracker. It's like any firecracker. Inverted hammer is very bullish. New members, Al, Heisenberg, Ray. You guys understand what an inverted hammer is? Very bullish, right?
Yes.
Exactly. Sound a little bit more excited,
Yep.
man. Yeah, exactly. You sound like, it was like the worst thing you ever heard. So yeah, what you do not want to be in is that's a hammer reversal. My apologies. Inverted hammer is a hammer that's falling on your head. And we see a bunch of those, and we've seen a lot of those during last week. All right, an inverted hammer is bearish, is a negative. A hammer reversal is positive. These are candlesticks. So you can see that visually. So my point is that that here, once we don't even know if we're going to get up to the 50-day moving average, because that's 400 points from here. We don't know yet. We have to look at the shorter term charts to figure it out. So coming back to the uptrend line, if and when, let's say a week from now or 2 weeks from now or maybe less, we actually go over the uptrend line, which is around 3160, 3170. You can write that down. On the S&P 500, let's say approximately 3165 on the S&P 500 from 2970. From 2970, if we go up to 3165, I'm doing a quick math. I'll tell you exactly how much the Dow needs to go up in order to go above the uptrend line, in which case the market's going to rip, like really rip. The market's going to rip even getting there. But above that, a lot of the imminent fear and danger on the institutional side will be like, okay, we're above the 50-day moving average, we're above the uptrend line, you know, it's good. So 3170, I'm taking the higher number. 3170 minus where we are right now, 2967, is 203 S&P points. New members, Al, Heisenberg, Ray, are you guys with me so far?
Yeah.
203 E-mini points, or let's call it just S&P points. 203 handles, they call it. 203 handles times 8. Rough.
1624.
Exactly. We use 8 as a conversion number. Write that down somewhere, guys. Yeah, new members. Okay, 1 S&P point, 1 E-mini point is roughly 8 Dow points. Roughly 7 or 8 Dow points. I take the higher number. It's 1600. 1600. If we get 1600 Dow points, that means we go back to 27,000. So if the Dow Jones goes back to 27,000, which was a pivotal mark and a feather in the cap for President Trump when the Dow went to 27,000, if you guys remember, okay? If we go 27,000 thereabouts and stay above that, the market will then at that point have a much easier path to get to 30,000. So the 1600 points is needed in order to negate one of the components of the vicious downtrend. We are still in a downtrend, ladies and gentlemen. I repeat, we are still in a downtrend. Futures are up 16 right now. There's a lot of fluctuation going on. We could be negative 30 points when you wake up tomorrow morning. Are you guys with me?
Yes. Yeah.
Exactly. I'm ready for it. I can explain. I don't want it. I want it to be higher so I can dump some stuff. I'm not going to short the market right away, but I'm going to see. Shorting the market is very tricky, as you all know. Most of the time, if you short the market, you're going to lose you're going to lose like big time, especially when everybody's trying to short the market, and there's so much fear out there. So that's basically it. So this is now one of the reasons why I am not thoroughly convinced yet that this is the real turn. In other words, we're going to take over and go above the thing is by looking at the simple. I'm trying to get this up, man. Come on. Simple stochastics. What is this line doing, Al? Al, what is this line doing?
Which one are we talking about? That one? Right there, trending up.
Al, are you upside down too, like Heisenberg?
No. Okay, I was looking at the wrong line. Going down.
I am showing you the arrow. Let me get the highlighter.
Yes.
Hold on 1 second. 1 second. Let me get the highlighter. So what is this line doing?
Hold on. I'm losing you here.
Okay,
Descending.
Yeah, it's descending. It's going down. It's called the full stochastics, which I explained to you guys in simple terms many times. What do we want this line to do?
Go up.
Exactly. We want it to turn. We want it to turn with the market. But if the line is not turning with the market and it keeps on going down and hits this low, or this was the ultimate low, when it was December 24, 2018, that is called the Christmas Eve Massacre. Okay, it was horrible. 630 points on the Dow on Christmas Eve. That was a lot of technical selling too. It's always technical selling. So bottom line is, we don't know yet whether it's going to come down here on the weekly basis. Short term, the market can bounce. But in order to get up here, this line has to, on the weekly charts, turn. Exactly. And once that turns and this turns, then even a little bit in between, little back and forth, as long as this is turning, you can stay long. You can buy the dips. You got it? It's as simple as that.
Got it.
It is not confirmed. There is no confirmation on the weekly charts. I'm not talking the daily. We're going to take a look at that daily and the hourly, which is really what we use for trading purposes. This is to get the bigger picture of what is happening. But just looking at the bigger picture will get to give you an idea when to buy, like pinpointing the 50 fib, and that's exactly where it bounced from. Picture perfect. But do you want to stay long for weeks and weeks? this chart is not confirming it, technically confirming yet. You guys with me so far?
Got it.
Yep.
So what does it mean? What does it mean in simple English? We're gonna get some big back and forth, man, which is gonna put you through the washing machine again. The rinse, Bubbles laundromat. Hey, owner of Bubbles actually lives in my neighborhood. He owns all those Bubbles laundromats. Guys like, worth like crap load, right? So it's going to be in the spin cycle. We're still in the spin cycle, guys, big time. Now, let's take a look at the shorter term picture. That's what we care about, right? Heisenberg, we care about what's happening in the short term, right?
Yes, sir.
With an eye on the longer term picture. But where's the money really made? On both sides, but in this particular type of volatile environment, short term is where the money's made. What is short term? Intraday, maximum multi-day, 2 or 3 days. Bumps up, sell. Now, the longer term charts on some biotechs and stuff, that's a different story. I'm talking the general market. Let's take a look at the hourly chart. The hourly chart is signifying upside. It is getting overbought a little bit. I would expect the market to go up to somewhere around, and this chart doesn't do justice, my other charts do, which I'll show you. I mean the investing.com ones. I have multiple lines drawn on it. So I'm going to bring one in. So yeah, so this one's telling me that I can go up to about 3,100, 3,094. So that is 30, what is it? What's this number here? 3,100. Let's say 3,100. Make it simple. 3,100 minus where we are right now.
Near 130.
Okay, there 130s, 130 times 8 is what? 130 times 8 is roughly about 1,000 points. 1,040 points? Yeah, 1,040 points. All right? So we can go up 1,000 points. Don't get excited. Sell the crap damn market. Sell it. We go up 1,000 points. Sell the market. And then reevaluate. The good news is you guys don't have to do it. I'll do all the hard work. You guys have to just get the messaging from the charts. Okay? Yeah, we could go up 1,000 points. Can we go up 1,000 points this week? Yeah, we can. Shorts need to cover. There's underlying momentum. A lot of shorts got in too late. Some shorts got in too late, thinking that that's it. This corona is going to just kill us completely. So yeah, if you get 1,000 points, TJ is a massive gift. Okay, massive gift from God. Take it, sell. We go up 400 points, take some profits. Now, the charts that I use and show you guys, so that's your 1 hour chart. The daily chart is telling me that, again, the daily chart is the one that we discussed. The 50-day moving average, wow, is right there. Now, there's a couple of positive developments on the daily chart. Volume, that's short covering, massive, massive. I haven't seen one like that. 5.5 million contracts. Holy, when was this? On Friday. That was that $30 billion injection of funds from some pension funds into the market. You guys see that, Al?
Yep.
Okay, you got.
Yes, I do.
You fund your IRA, 401ks and stuff. You guys have 401ks?
Yeah, of course.
Yes.
Okay, so those are the bozos who are doing this. I shouldn't say bozos, but they're smart. They did it. So those are the guys, because when you do that, you pick like what funds you want to put your money in and stuff like that, right? Or somebody else does it for you, right? So that's exactly, those are the funds which went in, and it was a small blip, but wow. So this is positive. So the stochastics are turning. Remember, it's not turning on the weekly. So that means there is another sell-off coming in the not too distant future. But short term, this is turning. You guys see that? It's really as simple as that. Every single time that it's turned. Can I get a yes or no? So I know you guys are getting it.
Yep.
Yes.
Yes.
This is so easy, it's almost laughable. But what's hard is when the market goes up 300 points, falls 50 points, and your head just goes up in a firestorm. We call it the monkeys on a hot tin roof routine. Okay, so in order to not be a monkey on a hot tin roof, and in order to be less emotional, you got to look at the stochastics on the daily and the 1 hour. Forget the weekly. As long as this is turning, little moves in the market, up and down, just the way it happened back in August. It went up, came down, went up, came down. And each candle is 1 day. And when the markets are volatile, does 1 day not seem like a day in hell? When the markets are super volatile, doesn't it feel like, oh my God, every 15 minutes?
Yes.
Like, yeah, exactly. Who said yes?
Al.
Exactly. See, that's a good yes. It's not a yes, it's a yes. You know, so a yes is exactly. It feels like, man, this is like this roller coaster, but it's only happening in 15-minute candles. So as long as the stochastics are moving higher, the market is going to move higher. However, if you're up a little bit of money as a new trader, take it. Nothing is sweeter than taking a profit. Now, what's going to happen is if you don't re-enter, when I say the uptrend is intact and you don't re-enter at the end of the day and stuff, you're going to see the market just rush past you, and you're going to be like, why the hell didn't I buy? So as long as this is going higher, I'm not going to keep on repeating, it is a good thing. This has turned. We would like it to keep on turning. In between, there's going to be choppiness in the market, but that means the market is going to try to get up towards these lines that I explained to you on the weekly charts. Now, the second thing is minus 400. In simple English, we haven't seen minus 400 for a long time. Minus 400 is when you throw the baby with the bathwater, and then you throw the mother and the father too. Oh, then you go in and you take the grandpa and the old sweet grandma, and you throw them out too. That's minus 400, okay? That's called a genocide. It's like in different parts of the world, they go in, they shoot the dad. I know this is horrible what I'm saying, but that's what they do. They shoot the dad, then they shoot the mom, then they shoot the 7-year-old kid, because just in case he grows up and tries to kill them, and then they shoot the grandmother and the grandfather. Oh, and they shoot the dog and the sheep and everything out there, and then they burn the house. Well, that's minus 400. That's what happened last week, okay? That's called a genocide. We had a genocide in the technical market. Minus 400 is unheard of. End of story. Let's move on. I think that analogy, is clean enough. So so these are positive. We needed to turn. We would like to see this turn. In that case, we stay long. In between, we take profits when things are, if you're up 300 points in the market, don't just sit there and say, oh, hi, it's going to go higher because these lines are going higher. Frank said these lines are going higher. In between, you could have a quick 200-point sell-off before it resumes its move up again. So take staggered profits. Guys, get it? Take staggered profits along the way. Keeping it real simple.
Yeah.
Keeping it real simple. That's it. Timing is never perfect for anybody, and it all depends on what kind of positions you have. The other way you can do it is, and many of my swing traders who don't have a chance to look at the markets like during the day and stuff like that, they just buy calls like a month out or 2 weeks out, and as long as the technicals are still moving higher, these are the internals. This is like your cholesterol level, your blood pressure, your whatever, what's underneath your skin. This is what's above your skin. That's called external, right? So as long as the internals are positive, they just hold it. And they add a little bit more to it. They hold it. They add a little bit more to it. And then once things get overbought and get to these levels, like the uptrend line and stuff like that, they sell. So that's another way of doing it. But I like, I watch the markets 24/7, right? So I have both type of style. I'll take a little bit and leave it out there, not touch that, even though it'll vacillate back and forth. And in the meantime, the short-term profits I keep on taking, as long as the internals cooperate. Do you guys understand?
Got it.
Exactly.
Yes.
This is the first level of barrier. We're coming up. So I'm going to keep on showing this chart, and I guarantee it. This is the only thing I'll guarantee, that you guys will understand a little bit better. Now, I showed you the 1 hour chart. So this is looking like, this is looking like a nice little move. Now, the other chart that I follow, I don't want to get too technical here, is the 4 hour, which is the first cousin of the daily. Okay. Now, why is the 4 hour chart important, Al? and no one answer, please. I'm just, how many, I'll give you the answer. How many trading hours are during a day?
8,
Exactly.
7.
So 8. Is it 8?
I'm thinking 8 because it starts at what, 9:30 and then closes at what, 4:30?
Yeah, 8, right? No, 7.
Yes.
Yeah, 8, obviously. So the 4-hour chart is very important because it splits that 8-hour into 2 halves. You got it? So this
Yep.
the 4-hour charts, and you learn more of this on when we do the whole charting session and stuff on one of the coaching sessions that you signed up for. So this is an important chart, and if you look at the stochastics, does this look favorable to you or not? Just first glance, does this look favorable to you or not? Just say yes or no.
No.
Oh, it doesn't look favorable to you. Why?
No, at the bottom. We're looking at the bottom. Yes.
Again, you're upside down again. Are you like you and Heisenberg, like doing like yoga or something today? Because you both are looking at things upside down. It's kind of funny. I can just imagine you. I do inversion tables, right? So I go upside down, like a couple of times during the week, and I stay there like for 25 minutes. You know the inversion tables, right? It's the best thing ever in your life you'll ever do. So the blood rushes to your brain. So I go completely upside down. So if I'm looking at my iPhone charts, if I'm trading and I'm inverted like that, I'd be answering the questions like you guys. Listen, so this is yeah, serious. Try the inversion table. The best thing ever. Takes care of everything. You do it for 15 minutes upside down, and you're like, you just get this calmness. Your muscles are all like, it's great. Just do it. If anyone's never been upside down in their lives, I'm not talking about your stock portfolios, but I'm talking about your body, and you don't know how it feels. So saying all that, is this, I'm going to ask Ray. Ray, is this a negative or a positive pattern on the stochastics, on the internals? And then please don't overthink. I mean, what's the first glance? Is that negative or positive, Ray? Quick.
Positive,
Yes, and why is it positive?
because it's ascending.
Don't give me some fancy English words. Just give me in
All right,
simple
it
English.
turned.
It turned what? Up or down?
It turned up.
Positive.
Exactly. If you had a client who would with 20 million bucks, but the guy doesn't know how to do math or anything, but you're going to try to explain to him in simple term. Hey, the price is going high on the house. You're going to buy it. So this is turning. It's turning up. Keep it simple. The KISS principle. It's turning up. So if this is turning up and this is starting to turn up, is that a positive or a negative?
Positive.
Exactly. Simple. So you're going to make shitloads of money this week, Ray, right?
Yes.
Exactly. You will. The more you understand this stuff, you're going to make a lot of money. Now, let's take a look at the McClellan oscillator. 1 second. Let's take a look at the McClellan oscillator. I always tell people, first glance, what you see is what's going to happen. Like that 5-second rule. We used to have the 5-minute rule on Wall Street. 5 minutes of conversation with a client, I know pretty much he's going to be there or not there. And it's pretty much, I can't really tell that about my trader members. Some of them I can when I first talk to them. Most of them I can. So so this is the 5-second rule. Look. So let me clean this out. So I'm going to ask the same question, and anyone just feel free to answer me, because these are the things that I look at. These are the things that keep me in the game. When the New York McClellan oscillator is at minus 468, I just explained this a few minutes ago, is at minus 470 on the 4-hour chart. What is that telling you?
You're dying.
In simple terms, in the market, what is that telling you?
Close your
Oversold.
eyes.
Yeah, exactly. Oversold. What does oversold mean? If a guy from Union City walked over to you, has no freaking idea about the stock market, yes, yeah, what does oversold mean? What does oversold mean in simple
They're
English?
cheap.
Exactly. Bravo. They're cheap. A lot of stuff is so cheap, I feel like going nuts. But the only reason I can, because, I mean, like really nuts. Big positions. And I'm doing good. I like, but position sizes are small to moderate. Now, why am I not going completely nuts and buying everything inside? Because of the intense volatility that we encountered. I don't want to do that yet. Yet, technically, if the world was all technicals and there was no coronavirus, or there was some coronavirus, and technicals were the 100% of the time work, at the same time, I think it's going to work, then it would be a sweet world. But it is not a sweet world. It's a cruel world out there in the stock market. It's cruel. But these charts make it kinder. And it's a fact. So yes, it is so oversold. It's like that complete genocide thing that I explained to you, which I don't want to go over again. Okay? It's like the cartel moving in and just taking out the whole village. So that's it. So this is good. So if it's good, then we would like to see it turn on the 4 hour. Once it turns, you can take some pretty nice positions. That I can tell you. Once it turns, you can take some pretty nice positions. So I'll certainly show it to you guys. Let's take a look at that chart that I didn't get a chance to look at because there's so much stuff to do. Paul, are you still there? You know what we're going to look at, right?
McClellan oscillator?
My proprietary McClellan oscillator, exactly. And before that, we're going to look at this, and there's going to be no questions on this. I'm just going to show it. Why can't I take it? You know what? This week was so wild. There was so much data coming through. All my screens were like going nuts. I checked my battery backup. You know, always have this big battery backup, the APC ones, you know. So my system if electricity goes out, my system stays on for like 15 minutes, or 20 minutes, whatever. I was doing some rewiring in the back, changing my screens and stuff a little bit. And the battery's gone. It's gone. Like it's showing it's charging, but there's a big red X next to it. I'm like, holy shit, let me take that thing out, you know? So this is what volatility did. It fried my APC backup battery. You know, this is those big computer looking ones, you know, 1500 watts and stuff. So this is how crazy the market was. Okay, this is called the 533 chart. Don't want to get into it too much, but this is unheard of readings. We can go back a couple of months. And Ray, Al, you will be getting a full tutorial on this, and you're gonna love it. Okay, on one of the sessions that we started. So it's all good stuff. Let me just do a Bollinger. Let me do a. Oh, come on, Google Ads. Let me do the pivot point. Let me do the simple moving average. I can't even tell you how relieved I am, and I know you guys are too, that these Heisenberg, your girlfriend's still there. What's going on here, man? She doesn't want to go away. Oh my God, she's back. What happened to her since you left her? Let's see. Oh, this is exciting. Paul, this is exciting. Gentlemen, this is exciting. Why is it exciting? We have a nice hollow candle. Don't want to get into it right now. You guys will learn that. A hollow candle to me is exciting. Okay? A hollow candle. What's the shape of the candle, guys?
Hammer.
Hammer.
Hammer. Hammer. Hammer time. What happened to Hammer? He's around, right? MC Hammer?
Yes, he is.
Yeah. I hate saying this. You know, these guys get
parking cars in Los Angeles.
Is he?
Yep.
He's completely broke?
Bankruptcy. Yep.
Yep.
Yeah, so did 50 Cent, except he was smarter. He declared bankruptcy and he was buying for Maseratis and Bugattis because he had the best lawyers in the world. Bankruptcy means nothing. It's just a fucking legal term. You know, he should have had the right lawyers. I'm so sorry to hear that. He was fun. He's parking cars. I'm sure he's parking cars and people are like, oh my God, he MC Hammer giving me $100 tip. I hope he's it. He's a good guy. He wasn't a gangbanger and stuff like that.
He was buying gold faucets for his apartments and homes.
Yeah, so?
Way to burn your money up.
Yeah, well, a lot of people buy gold faucets. Been to the Trump building? It's all gold faucets. I'm just kidding. No. I feel really bad. This is something new to me. I had no idea. Yeah, it's gold faucets. I mean, come on, these rappers, you know, not rappers, anybody. You see what Dubai sheiks do? They freaking have gold toilets and they have gold water going through it. Seriously. Anyway, before I get in trouble, let me just start. So bottom line is this is turning. We need to see this start to shrink a little bit. That's the MACD that would give us a nice, this basically needs to shrink. The MACD histograms need to get towards 0. Once it starts, once I start seeing 2 bars, 3 bars, I start to get more bullish. Okay, if they keep on expanding lower, I know this ad is thing is was kind of covering it, but if it keeps on expanding lower and the market goes higher, you almost have an 80% probability the market's going to take another leg down. So it has to, the internals have to correlate and validate the external moves in the market. This line moving, crossing over is good. I would like to see the crossover generally begins. The crossover began with a hollow candle. That is extremely bullish. Now, extremely bullish to the levels that we talked about, 3,100, right there, 50 fib. Got it? So, and this is, yeah. So that's basically it. I'm quite bullish till 3,100. Depending, we cross all these lines on the way up. Once it crosses over, given 2 or 3 days, that's a technical confirmation that the market is here to stay for probably another couple of days, if not a week or so. So this is good. Now, the RSI, which is the relative strength index, the underlying muscle mass of the market, right? The torque of the market. That's what I should say. The torque of the market is basically the muscle mass is the MACD and stuff. So that if this starts to turn, let's go. They generally tend to get overbought when we are coming from these like completely hellhole situations. They tend to get overbought above 50, above 70 very fast. What is very fast? 1 day, intraday, or maybe 2 days. Sometimes maybe 3 days. You guys with me?
Yeah.
Yeah. So we basically, the world ended in 6 days, and on the 7th day, Moses showed up and he said, "Let's go to the promised land." Right? It was the 7th day. 1, 2, 3, 4, 5, 6. On the 7th day, we saw the shining light in the sky. Hey, I did say the moon. Remember last session?
Yeah, the full moon.
Yeah, I know it wasn't the full moon. You don't listen. It's the new moon. It was the 2nd day of the new moon. By the time the full moon comes, the market's going to sell off. You think I'm kidding? Watch. The market generally peaks during the full moon. I told you guys to look up at the sky. None of you guys did. So, all right, I don't want to get into the moon theory stuff. It works, trust me. So, so let's do this. So this is good. Now let's take a look at the McClellan oscillator. McClellan oscillator. iPhone is a moon calendar. Check it out. Let me know, you guys, like when the full moon is. I check it. Full moon is generally a peak in the market short term. A new moon and the day or two before that is generally in the market. I've seen this happen repeatedly, year over year, overall. Now, the only difference is that this time we got Corona. Not the bad beer. I'm talking about the virus. So that's the difference. Under normal circumstances, the moon theory works very well. So what is going on here? Let's put a NIMO. Paul, what was the NIMO on your thing on Friday?
I think it was -400.
Because yours has a slightly different scale. So, and this one has a slightly different scale. So let's do this. I haven't seen it. So last we saw was 100.22, correct? On Thursday evening?
Yeah.
Yes. So, and by the way, for new people, Heisenberg knows, but for Al and Ray, these are measuring in simplest term how cheap something is getting and how oversold something is getting. That's the measure of this, is the technical measure called the New York Stock Exchange McClellan oscillator, which I showed you on the other screen. This is the one that updates for me only after 5:30 at night. So not during the day. Oh, come on. Sorry, guys. Pivot. Full stochastics. Bingo. Let's put some color on this pig. Lipstick on the pig. That's what they say, right? Who started this saying, we put lipstick on the pig? So stupid.
Sarah Palin.
No, she didn't start the term lipstick on the pig. I mean, it's been around forever. But,
there was a brokerage commercial that used the expression.
Oh, really? Like back in the 70s or something?
Yeah, the guy was having the sales meeting talking about the new offering and ended it by saying, let's put some lipstick on this pig.
All right.
And go out and get it.
Exactly. Guess what? They still use that in all the realty firms and the chop shops. Let's do it. Well, what chop shops? Goldman Sachs guys do it too. Everybody has to put some lipstick on the pig to sell something, right? If it's a crappy thing they want to sell. Okay. So this is the NYMO. Wow, minus 136. I haven't seen those type of readings ever. I don't know. Let me go back. 2 years. Ray, are you still with us, Al?
Still here.
Okay.
Yes.
So look at this chart carefully. Sorry about these ads and stuff. This is a public site. I need to subscribe to. Yeah, I'll subscribe to stock charts. Say a couple of bucks a month, so that I don't have these stupid ads going around. Or maybe there's an ad-free version. So let's do this. Quick real exercise. Back on December 24th, 2018, what happened? I mentioned it about 7 times in the past 30 minutes. And
Z massacre. Oh, sorry.
Z, shut up. I'm asking my new people here. What happened on December 18th, December 24th, 2018? I mentioned it a lot in this session. Al.
Christmas Eve massacre.
Exactly. The genocide. It was horrible. For that time, it felt like the corona. Seriously. There was 3 days of incessant selling. We were like scrambling, buying some spy puts, this and that. You know, it was just like bad. I think we had 2 good days and we had 1 bad day. So overall, we did okay. So that's why I said, and I told myself, you know what, after that, I said, you know what, I'm going to go long with some stuff. And the next morning on December 26th, the market was up 1,000 points. 1,000 points. Our calls went so high, I was like scrambling to sell and it kept on going higher. Okay, so that was December 24, 2018. What was the reading? And Z, no answers from you, please. Okay, seriously. What do you call on what was the reading here on the McClellan oscillator? And Mike, no answers from you either. Just the new guys, Al, Ray, and Heisenberg.
Negative 109.61.
Correct. Generally speaking, when we get sharp oversold conditions, couple of 100 points down, 1,000 points down, what is the type of reading we get? We get minus 97, which itself is horrific. Minus 66, which are the general conditions. The market means the market's down 600-700 points, and everyone thinks the world's falling apart. Okay. Minus 66, minus 66, minus 79, minus 65, and all 100% of the time. 100% of the time. I can't make these things up. The market has bounced sharply from those levels. Market has bounced sharply from that level. When it was minus 110 on that Christmas Eve, as I repeat again, on December 26, 27, 28, the market went up close to 1,600 points or 2,000 points in 3 days. The first day was up 1,000 points. Okay. Now, what was the reading on Friday afternoon, this past Friday afternoon?
136.48.
Is
minus.
it minus? Thank you. Minus 136.48. Oh, on 2019, January 2019, we reached a peak of plus 118. Horrendous. You see something up in that minus 117, I don't think we'll see ever for that stuff. What do, Al? Just the opposite of this. What do you do when it reaches a plus 117? Which is historical. It never does. It normally goes to 53, 59, 60. No.
So
you talk to Frank about getting your car wrapped.
1 second. Mike, stay away from me. Al, just the opposite of this. Very simple question, just common sense. If it reaches overbought levels of like plus 117, plus 118, what do with your options?
Sell.
Sell, and you can go short, hard.
Yep.
And what happened in this phase here? Why did it rise like that? Everybody, mom and pop, I'm dead serious. That was the time they all rushed into the market. That euphoric feeling like the market can never go lower. And bang, they killed it. Market's a vicious beast. Doesn't care whatsoever. And then the bozos come out and tell everybody that the market's just going to hell in a handbasket. Like the same bozos who told you never to buy stocks in 2009. Except the market didn't fall in 2009 because of stocks. It fell off real estate and house flipping and no doc loans and all kind of scams when it came to the real estate market. That, fun stuff, right? So now, if you look at this, 117, 136, it's almost like it's like 100 to like a complete reversal, right? This is all happiness. So I'm going to draw a heart and smiles. And this is all crying. Can I draw cry? All tears and fear. No hearts. It's like the skull and bones. No hearts, no love. That's at minus 136. So generally speaking, that's a buying opportunity. Now, doesn't mean it's going to do it exactly tomorrow, which it looks like it will. It might vacillate around, but this is unheard of readings. Unheard of readings. Just wanted to show you guys that. This is like, you're basically walking in and buying, when they're throwing away the houses. You're buying $1 million house for 30,000, for $100,000 bucks. So that's what it looks like technically. So that's where we're at, minus 136. Wow, it just took my breath away. That's crazy. So much damage. Now the flip side of that situation is, guys, that there has been so much heavy damage. It takes a little bit longer to repair that damage. This is like a serious. It wasn't just like I said. It wasn't a sucker punch. It's like somebody just cracked your skull. And we still came out green for the week. Hello. That is an achievement. So that's why I'm not scared of the market at all, because they're going through that. I went through other pullbacks, but now these pullbacks are bigger and faster and quicker. All right, any questions? I think I covered a lot of things here. I don't want to talk about anything anymore. But certainly ask me a question. Tell me, hey, where do you think Apple's going to go? Or whatever.
Hey, where do you think Apple's going to go?
Okay, I'll show you where Apple's going to go. Thanks. I'm going to show you where Facebook is going to go. I actually like Facebook more than Apple here because Apple's got the China issues. Right? Apple's got the major China issues, unfortunately. What if there were a couple of Apple's biggest stores are in all the big cities, right? Beijing, Shanghai, all those fancy cities. So what if the rise in Corona things and they have to shut the store down again? That can happen. So don't want that to happen. But they reopened their stores. People love their products in China. 12% of Apple's sales come from China, which is a pretty big number, and they're growing pretty nicely. So where is Apple going to go? So looking at this here, best case scenario, Apple's going to go back to the 50-day moving average. Same old story. Look at that. Boom. That's a total breakdown. Oh, this is what I wanted to show you guys before I left. All this hardcore, all this unbelievable carnage and devastation. The moving average is still, they're lowering down, which is not a good sign, but they still never crossed over. Just so you know, Ray and all the new members, when these moving averages cross below each other, no good. When they cross above each other, the orange and the red line, 34 and the 50-day, stay long. When they cross down, that means every major rally, they're going to sell. They're going to sell. So I don't want to see a crossover down. Now, what's the interesting part is if you look at the weekly chart, Al, do these lines look like any severe damage? In other words, are they like buckling down really hard? as far as you can see? I'm just asking for your eyes because, you know, I want to see like what other people see. These two lines, the 50-day moving average, the 34-day moving average, do they look like they're buckling down? Okay, Al's not here. What am I saying?
Not totally, no.
No, but they are. What do you mean not totally? They are slightly. This is still trending higher. This is slightly lower, buckling down, right? Very
Right.
slight. Yeah. So this is a very good sign. That means throughout this massive damage, we still couldn't get a negative crossover. Like I say, crossover up or crossover down. We still couldn't get a crossover down. And through all these massive moves, these lines, which are 34 days and 50 days, they never crossed down. So that means the market still remained in a bull market despite massive drawdowns. It's a very simple way of looking at it. This crossover up was the first sign that the markets were going to rip, even though we had 4 days of pullback when the 34 crossed over the 50. I did mention that. So this is, I'm going to be monitoring this. If it starts to buckle down, then you short every rally. I mean, you sell every rally, and you get ready to short the market again. So we don't know yet. So Apple, real fast. I'm going to be looking at Apple not on the longer term chart because I have no freaking idea what's happening longer term. I am looking at it on a short term chart. For swing charts, I'm going to use the 1 hour. I normally trade Apple at increments of $3 to $5. There's a gap fill here. Does everyone see that?
Yep.
This gap fill. That gap is 313 to 302. That's $25 higher, ladies and gentlemen. You can make a crap load of money. I have no idea if it's going to go to that gap. But if we do get that 1,000 point type of rally, Apple will get into this, try to attempt to close this gap. And you could make a lot of money. So people ask me, so what kind of options do you have? If we start to see the market cooperating, all these lines starting to turn nicely. Okay, I want this McClellan to turn. On the 1 hour chart, then you can buy Apple $10 out. So the Apple's for $275. You can buy the 285. I normally buy the 280 strikes, $5 out. I normally play Apple $5 to $10 out. But if I see a strong turn in the market, I'll even buy the 300 strikes. Not for this week. I'll buy it for next week. Something like that. Just so you know. So best case scenario, Apple goes into the 302 level. Short term, I'm looking at Apple popping about $10. That can happen tomorrow. Okay, so that's how I'm playing Apple. Let's take a look at let's take a quick look at Facebook. Paul understands the stock very well. Thank you for all the information that you provide me on certain news items and stuff, which is very helpful. Appreciate that, Paul. So let me see here. Let me get the drawing tool out, erase all drawings. So Facebook options are cheaper, similar, same price as Apple's actually. And Facebook, in my opinion, well, we're going to 200. So basically, again, a gap, 205 to 210. That would be a gift from heaven. A short-term move towards 197. I play Facebook in increments again of $3 to $5. And the daily chart is same thing like the market. It's starting to turn. McClellan oscillator is at complete genocide levels, minus 400. Like, oh my lord. Very bullish candle. Look at that. The stock bounced from 182 to 192, $10 just on Friday. And I like it. Where is the 50-day moving average? Wow, 211. Yeah, a lot of room to move, guys. All right, any quick questions? I'll wrap up. There's a lot of stocks, and if the rebound sticks, just like the intraday rebounds, like everything goes up. It's tough to buy everything, right? So we look to see the ones which will give us the biggest bang for our buck. And even then, we miss some of the fast movers. Great. Any quick questions, sir? Al, you're back. I was explaining Apple and Facebook. You know, who's that?
It's me, Ray. You mentioned gap fills.
Yeah.
A couple of meetings. Could you just briefly give me an idea what that is?
Yes, just a gap.
How does it happen, or yeah?
Don't ask me for the long-winded thing. Those I'll explain to you in advanced coaching sessions. By the way, I do want to. No, I'm going to show you a gap fill. There are a lot of gap fills that happen in the market, especially in volatile markets. There's always gap fills up and down. How do they happen? There is from the day before. From the day before, this market either opens up, jumps, and you see that on the charts, or it falls down. Like futures opening down 40 points, there's a big gap in the market. It's not like a normal stream thing. So that's called the gap fill. This is the site that all of you need to bookmark, especially new people. Any of the terms that you don't understand, I'll try to explain in my simple terms. But if you want to know a little bit more, which would be very helpful, this is the ultimate site for anything to do with the financial industry. It's called Investopedia. So if you're Investopedia and I type in gap fills, it'll explain to you in very nice terms what gap fills are, but I'll show it to you on the charts. How do they happen? There's a price discrepancy. Gap filling on sale, gaps and gap analysis, all this stuff, playing the gap. All right, so definitely look at Investopedia, anything you want to know about anything. Far more better definitions than me giving you guys a short and silly explanation. So this is the daily chart of Facebook. You got that, Ray? Investopedia?
Yes, thank you.
Yeah. You gotta make friends with that. Okay, so okay, that's a gap fill, and I show this in my charts all the time. See that gap fill?
Yep.
That's a small one. I wouldn't consider that much. Here's a big one, right there. There is another one here. Gap fills happen when there is a sudden drop in stock price or a sudden rise in stock price, and the actual reasons, which happens overnight. That's known as a gap fill. I mean, a gap. Gaps always get filled. Don't ask me why. There's an old saying that nature hates vacuums. Not vacuums like you use to clean your rug. Actual vacuum in nature. It always likes to fill it. It's a law of nature. So they say, oh, gap fills are like that. I don't know. All I know is gap fills work. So on my charts, I show that. So there's a gap fill here at around 204, close to 205. There's a very good chance as it moves higher, it's going to fill that gap at 205 or the upper gap at 208. So that's what I mean, Ray, by gap fills. Okay.
So it's bullish.
It can be bearish too.
Okay.
Well, why does it have to always be bullish? Anytime, yeah, it's bullish when depending on which direction you're coming from. It's
right.
definitely bullish if you're coming from the bottom. It's definitely bearish if you're coming from the top.
Got it.
Yeah, exactly. If you're coming from the top, it's definitely bearish. Coming from the bottom, and this type of gap is unheard of in the case of Facebook or any other stock. But then what happened last week is an aberration like that. We're talking about 50 years from now, 100 years from now. So that's what it is. All right, guys. Al, any last question?
No, I just had
Sure. Hurry up, though.
a stock, IBIO. My son is trading down in college, and he called me this morning about it.
Are you sleeping on the job? We gave IBIO at 56 cents, and the stock went to almost $4. I showed all the charts on that. So is that the stock you're talking about?
I think so, because I looked it up today and I didn't find anything.
So it's 11 o'clock, so let's keep this short. Good luck to your son. We've been trading it. We are still long the stock, but we sold most of it based on the chart that I put out there, IBIO.
Okay.
IBIO, I looked into it. IBIO, what, they make face masks and stuff? So,
I'm not sure. Go ahead.
Okay. Yeah. So there's they would certainly have to do it. We were given the stock at 56 cents. You know that, right? We told you guys to buy it.
Okay.
Yes.
So what it seems like you had no idea that we traded the stock for 300% overnight, right?
No, I didn't know.
Okay, good. At least we covered that fact. So that's the reason why it's not news to us. That was one of our biggest winners between Thursday and Friday. And so I have the chart on that on my Twitter feed. Feel free to send it to your son. It might save him some money when the stock crashes down to zero.
Okay.
No, I'm not kidding. I'm not kidding.
No.
It's a real company. It's a real company. Let me clean this out. It's a real company. By the time you see, these are high flyers, and there's a whole bunch of about 60 stocks that are going nuts right now. A lot of them are just bullshit companies, but the speculation is like the mania that starts. Remember the Bitcoin mania? Like anything stock that was in blockchain, they just went through the roof, right?
Yes.
Yeah,
Yes.
penny stock. So that's what's happening right now. So unless your son is a professional trader or somebody who's very interested in the stock markets, I'm sure he is. Otherwise, he's just gambling. And
Okay.
if he's gambling with a lot of money, he's going to be asking daddy for a lot of money soon. Okay, so just letting you know. Okay, just letting you know. But otherwise,
Thanks.
I'm sure he's a smart kid. He did his homework. So this is where we are. I showed I put the chart on the Twitter feed. Find it, by the way, and send it to your son. Yeah, send it to your son. He'll find it helpful. And I drew all the lines and stuff. So I'm looking at the stock, and this is the breakout level right there, 166. We were given to it by one of our members who looks at a lot of these stocks, small price stocks at 56, 55, 56 cents. What a bunch of it. See you later. So it just took off. I sold a bunch of mine, most of mine, around 86, 88 cents after hours. Can somebody mute the microphone? I'm getting a headache. Please. Thank you. Okay, that's a lot of noise. And then I rebought it back pre-market at around $1. Who's caller 01? Okay, anyway. And I bought it back at around like $1 or so pre-market. It's a stock, so you can buy it. And boom, it took off. And it didn't take off in a straight line. It kind of zigzagged around. So I showed around $4 on my chart, close to that, right? I know you guys seen it. Caller 01, can you identify yourself, please? Caller 01, if you don't identify yourself, I'll have to basically kick you out because there's some weird people come in here once in a while. And okay, you have been dismissed, gone, fired. So the bottom line is looking at the longer term chart, and this stock, I go monthly. It peaked at 6, so I actually showed this. So all it did was go back to where it was in October of 2014. I don't know why it peaked in October 2014. Was SARS in October of 2014? The SARS virus stuff? Maybe.
Might have been. Sounds about right.
Exactly. And that time it peaked around the same level it peaked here. But if it keeps on going, the stock can go to 6. But find that chart. I have it nicely drawn and stuff on the Twitter feed on Friday, and just copy and paste, send it to your son.
I will. Thanks, Frank.
Okay, no problem. All right, guys, a lot of good stuff covered. Have a blessed evening. Let's hope the futures open up higher and not lower again. Yeah, go ahead, Zia. I gotta go though.
I'm sorry. I didn't want to cut you off, and it's getting late. But energy is going down, so I was looking at Halliburton.
I'm not going to even bother looking at energy right now. Okay, really, I have no desire for energy. The only energy stock that I trade, not Halliburton, EOG. Okay, EOG. EOG is the best, and the options move. So EOG is the only stock that I trade on the energy side. I've traded a few of them, but I have no desire for energy whatsoever. Oil is going to remain low, and yes, you can trade those. But I will. You can send me 1 or 2 names that I'll put the charts out there. But I personally have no desire for energy, oil. So that's just what I'm saying. And if I do have any inclination, this is the only one that I buy. Does anyone know what EOG is? Not only is it great, oil exploration and a very well-established company. Why is EOG?
They're the king of fracking.
Okay, EOG is Enron Oil and Gas. The new one. This is Enron's prodigal son. Okay, one of the best companies in America, EOG. It's Enron Oil and Gas. So I thought I'd mention it to you guys. That's the only one of the few ones that I follow. But saying all that, if energy starts to warm up, I'll look at a couple of select names. And I certainly don't care about Halliburton and stuff. Those are the boring names. You want to buy the ones which have the higher beta, better options, and those are the ones that I like. EOG is one of them.
Thank you.
And there's okay. Have a great evening. Fantastic, guys. Let's hope the futures stay up, pray, and let's hope that 3 in the morning when the European markets open and the Pope supposedly is coughing. And oh Lord, this is like getting rough. So I hope not everything turns around, but I'm prepared for a bad opening. We know what to do. Same playbook, but let's have a good opening, sell some stuff, and then basically try to see where we can re-enter. That's what my wish is. Good night, guys.
Good night.
Thank you.